Good afternoon, everyone. You're very welcome to Sherry Fitzgerald First Time Buyer webinar. My name is Colin Byrne. I'm Head of Sales and Director in Sherry Fitzgerald New Homes, and I'll be your host today for what's our third and final webinar of 2025. The title of today's webinar is Preparing to Buy Your First Home, and I'm delighted to be joined once again by our guest speaker, Michael Broderick, CEO of the First Home Scheme, and also my colleagues, Marguerite Boyle, who's a fellow director in Sherry Fitzgerald New Homes, and Ronan Richardson, associate director from our Sherry Fitzgerald Financial Services team. Marguerite, Ronan, Michael, you're very welcome. We look forward to your presentations. The focus on today's webinar is to help educate first-time buyers looking to purchase their first home on the various government incentive schemes available, along with tips on how to get yourself mortgage ready. Ronan will kick off today's presentations with an overview of the mortgage process and also some helpful tips. Michael's presentation will help explain to us how the First Home Scheme works, along with information on the number of people it has helped purchase their first home since it was first introduced in summer 2022. Marguerite will then conclude with the presentations with an update on the Help to Buy scheme, along with other recent government initiatives announced in the budget to help the supply of new homes and apartments. She'll also highlight some of our existing upcoming new developments featuring apartments, duplexes, houses, many of which will qualify for first home and Help to Buy, and also other schemes as well coming in the rest of 2025 and early in 2026. Before we get started, I just want to go through a few housekeeping items. We're conscious everyone is busy, so we're going to try and keep the webinar to 45 minutes, so finishing around 1:45. Presentations will take 8 to 10 minutes each, and we'll have some questions peppered in there as well. And we've had lots and lots of really good questions. I suspect will be answered mainly in the presentations, but if there's a few coming through, we'll keep an eye and I'll put them to the presenters. So feel free to pop them in the question box. We are recording the webinar and the slides will be emailed to everybody who's registered. There's some useful links as well along the way, so have your camera ready and be able to take photographs of the links, but they will be circulated in the slides at the end of the session. So getting into our first presentation, buying your first home we know can be a daunting process, and when it comes to getting a mortgage you need, it's good to get expert assistance. Roughly 1 in 2 people getting mortgages use a mortgage broker, and we have a really good team in Sherry Fitzgerald Financial Services to help you. Ronan, welcome. I'll hand it over to you for your presentation.
Colin, thanks very much. Everyone, good afternoon. Thank you so much for joining us. So as Colin said, Sherry Fitzgerald do mortgages, and I'm one of the mortgage brokers working as part of that network. I'm primarily based in North Dublin. I look after certain branches there, Phibsborough, Drumcondra and Clontarf, but I also work very, very closely with New Homes and our New Homes team in helping clients who at the very start of their mortgage journey navigate all the hurdles that are in place. Because we're a mortgage broker, we work with all of the main lenders on the market, typically Haven, which is a subsidiary of AIB Mortgages, PTSB, Bank of Ireland, Avant Money, ICS, Nua Money Mortgages, MoCo, and more, which ultimately means that we can compare options side by side to find the best fit for your unique circumstances. And at the end of the day, what we're trying to do here, crucially, is match the best rate with a lending policy that works specifically for you. We manage all aspects of the mortgage journey, right from now down to when you get the keys. And the aim of what we do is to try and make this process as smooth and as stress-free and, dare I say, even enjoyable for you. Today's session is all about trying to help you understand how to get mortgage ready, what lenders look for, how much you can borrow, which is what everyone's most interested in, and ultimately what we can do to make the process as smooth as possible. So moving on, just outlining kind of the various aspects of what we'll touch on. So we'll go through how much you can borrow, what you need to qualify, and ultimately what's important for the lender. Each lender has their own nuances in how they interpret central bank rules, which is really important. The central bank sets the framework, but it's up to the individual lender ultimately to negotiate the criteria within that. That is absolutely key to this whole process. So moving on to the first aspect of what we're going to discuss today, which is how much can I borrow? Some of this might be new to you, some of it you might know already, but ultimately in Ireland, the central bank lending limits give us a broad outline on how much people can borrow. Typically for first-time buyers, you can generally borrow up to 4 times your gross annual income, or for joint applicants, your gross annual income is added together. Now, I'd say there's people roaring at their microphones saying, I know somebody who borrowed 4.5 times their salary, and do you know what? That can happen from time to time. There are exceptions, and there are things that we can help you navigate as well. So within that broad framework, each lender has slightly different policies. For example, some might include overtime, commission, bonus income if there's a consistent track record. Some will include more variable income than others. Others will include less. Some may only take a guaranteed element of your pay. Age and mortgage term also come into play. So broadly speaking, for most lenders, they want your mortgage cleared before the age of 70. But again, there's flexibility, and some lenders will consider slightly longer where there's strong affordability. When I'm working through a mortgage application, what I'm aiming to do is look at your overall financial picture, your salary, your outgoings, any loans, childcare costs you might have, because the lender is essentially trying to understand what's left at the end of the month after all commitments are met. It's important to consider as well during this process that living expenses are also factored in, and those vary very much by household size. So an example of that would be a case where there's 2 people potentially in the same job, potentially in the same income bracket, but they could have quite different borrowing capacities depending on their lifestyle and their monthly spend. And it's up to us to help our clients navigate this. So I suppose moving forward into one of the most important aspects of this, which is, what do I need to qualify? And what we're looking at here really are the ingredients for approval. And these ingredients can be pretty consistent across the board, but again, there are nuances from lender to lender. So it's so important that we guide you through based on your unique circumstances. So typically, when we look at deposit, what does that mean? Well, for first-time buyers, it means that you need a 10% minimum down payment. If you're buying at 400,000, 300,000, whatever the case may be, that's a 40,000 euro down deposit, 30,000 euro down payment. This money can come from savings, it can come from a gift from family or friends, or, as we'll touch on more broadly later on in the presentation, it can be through the Help to Buy scheme or the First Home scheme, or indeed a mixture of both of these. In a lot of cases, a track record of savings or rent repayments is also really important here. This shows the lender that you can comfortably handle the mortgage repayment amount. Now, again, there is flexibility here. This is very much the case with the traditional lenders on the market, but more recently with newer non-bank lenders, there is flexibility there for people to borrow who do not meet that criteria. The crucial thing really for a mortgage application is stable employment. That's key. Ideally permanent or a long-term contract. But we also see lots of cases where people are self-employed or potentially in short-term contract work, particularly in the tech industry. And each lender will have their own approach here. For self-employed people, it's different again. Some lenders want 1 year's account, some 2, some lenders want 3 years account. It's also important to have an awareness of the additional costs that are involved in the mortgage journey. And it is important to map these out at the start and to maybe budget for these as well. These will include your solicitor fees, your valuation fee, your stamp duty, which is set at 1% of the market value of your property. But it's also important to budget for protection policies which you'll need, such as life insurance, which is mortgage protection, and of course, home insurance. At the end of the day, what's really important to emphasize here is that every case and every individual is a little bit different. And this is where we as brokers really help. Knowing which lender is most flexible and most matched to your situation saves you a huge amount of time, a huge amount of frustration. So I suppose moving on to the next part of the conversation, which touches on what is important for the lender. And broadly speaking, even though there are nuances, there's three things that are most important. So repayment ability. So again, this is showing a savings pattern, or maybe a pattern of rent payments, or indeed maybe you have an existing loan that you've recently terminated. This is where we can show that your future mortgage repayment is indeed sustainable. Credit history is also very important. A clean repayment record is key, but even if there is a mispayment or an old loan issue that's historical, this doesn't necessarily mean a decline. It just needs to be explained properly and within its context. And I would say, please flag that up front with us and we can help you navigate that. In terms of lifestyle, lenders look at your bank statements, not to snoop, but to understand how you manage your money. They don't expect perfection. They don't really care if you are using your contactless card to buy coffees every day of the week, but what they do look at is consistency. Some things can be red flags to lenders, such as maybe regular gambling, excessive overdraft use, or indeed bouncing payments on standing orders or direct debits. But again, as a broker, we'll review all of this with you before we submit your application to any bank or lender, so that when it goes in, it's a clean, well-presented application that ultimately reflects you at your best and gives you the best opportunity at getting approved in good time. Moving on, it's important to know that we at Sherry Fitzgerald are here to help you at every stage in your journey. As Colm said, there's a variety of links here that you can look at. Our Getting Mortgage Ready guide, the mortgage calculator, and we also have the option to book an appointment with one of us directly through the Sherry Fitz website or by phone. My greatest recommendation would be that even if you're a few months away from applying, an early chat can really help map out your borrowing capacity and clarify which lenders are best suited for you. And I suppose in closing my side of the presentation, my details will be shared after this. So please, if there's any queries that you have that are unique to your circumstances, let me know. Being mortgage ready is about preparation and about understanding. And as brokers, our job is to guide you through the process, compare the full market, and position your application with the lender most likely to say yes. Every bank has its own quirks. One might be stronger on long terms, another on self-employed income, another on green rates, another on exceptions. So it's about matching you with the right lender. I very much thank you for tuning in. And again, if you would like to talk about your unique situation, you can book in or call with me or any of my team through our website. It's a face-to-face meeting. And ultimately, I wish you all the very best of luck in your journey. And hopefully this helps you make the next steps with confidence.
Thanks very much, Ronan. That's a very insightful presentation there. We do have a couple of questions, some we'll save for the end, but just one that's just come through there, Ronan. It's one that, can I get mortgage approval for a new build studio or one bed as a single buyer? I'm hearing some lenders reject these applications.
In short, absolutely you can. Now, this again goes down to nuance with lenders. With some lenders, if you are purchasing a one bedroom or studio apartment, they'll reduce the amount of mortgage that they can lend to you down, say from 90% to 80% or 70%. But some lenders don't have that limitation whatsoever. As a sole applicant, all banks will invite you to make an application with them. And again, getting in touch with us early can help guide us through which bank is best suited for your unique situations. But in short, absolutely, you can.
That's great. Thanks, Ronan.
Pleasure.
We're going to move on to our next presentation with Michael. Since the first home was introduced in summer 2022, I think it's helped just over 4,000 people now who are living in their first home, and you've many more applicants approved. We've seen as an agency in Sherry Fitzgerald New Homes an increase year on year of people using this scheme, obviously as awareness is raised. And I suppose as a recent anecdote, we had a launch in Louth and we had 65% of our purchasers telling us that day that they were intending on using the First Home scheme as part of their purchase process. So Michael, I leave it to you to give us an explanation as to how everything works.
Thank you very much, Colin, and good afternoon, everybody. I'm delighted to have an opportunity to speak to you here today on the First Home scheme. So hopefully over the next few minutes, I'm going to highlight, I suppose, some of the key facts and details around the scheme, how you go about applying for it, how it works, and also then in terms of how to find any answers to queries or questions you may have that I don't actually cover or answer here today. So if we just move on there then, I can, and the next slide, thank you, Connor. So firstly, I suppose the key question is, what is it? So just a very brief background, it's a fund put together by the state, the government, and the three main banks. And that's important because I'll explain a little bit later why that is. So AIB, which includes Haven and EBS, Bank of Ireland and PTSB. And the current size of the fund is 740 million. It started off at 400. But because, as Colin alluded to there, it has been very successful. We've had to have two additional rounds of funding, which thankfully both the government and the banks have committed to. So it's now at 740 million. Just some myths, firstly, to dispel, because, we go out and we talk to people and meet the public quite a bit. And, some recurring questions that we get. And, look, as with a lot of things, there's a lot of myths out there circulating around social media. And I just wanted to dispel some of those at the outset. So first and foremost, it's not a second mortgage. I know not so much anymore, but at the outset, there were a lot of people, particularly, some commentators and politicians saying, oh, sure, it's just another mortgage. Hopefully, as we go through the presentation, I'll explain precisely to you why it's not. The next one is government will own part of my home. Again, not true. The First Home scheme will take what's called an inhibition. So it's like a second charge behind the bank. So your lender will take a first charge, we take a second charge, and once that's paid off, we disappear. The same as the banks disappear when your mortgage is free. We don't come inspecting your house. We don't care what color you paint your walls, etc., etc. It's exactly the same as the bank. They don't come and inspect your house. We won't be either. We far better and more important things to be doing and busier things to take up our time. And the final bit then, and I know Max is going to talk about it in her piece, but it can be used in conjunction with the Help to Buy scheme, and it works really well with that. And if we just move on, I'll explain that over the next slide or two, how that happens. So who's it for? So it's for first-time buyers. So you must be either a first-time buyer or somebody who qualifies under the Fresh Start principle. And the Fresh Start basically includes people who've been in a relationship. There's been a property held with the couple. For whatever reason, that relationship is no longer exists. And either one or both of the individuals in that relationship get rid of all ownership in the original property. And if that is the case, then they can actually use the First Home scheme to get back on the property ladder and purchase a home. It also applies to a very small cohort of people who've gone through insolvency. So if you've been made insolvent or whatever, you can use the scheme as well. So it's a small cohort of people who use it, but for those people, it's really important because it does help them get back into the property market again, most of them which are a later stage in their lives. You must have a senior mortgage approval. So again, to reinforce there what Ronan was saying earlier, normally speaking, you can get 4 times your income. And if you are using, or if you're fortunate enough to get one of those facilities where you can go over the 4 times, well, then you can't use our scheme. So you either use that or use the MPE. So it's really, I mean, people like Ronan can advise you on that situation in terms of what's the best outcome there. So it will vary and depend entirely on your circumstances. As I say, if you're fortunate enough to be offered an enhanced mortgage. It's not a replacement for a mortgage, so an important point. So you can't go to your bank and say, you know what, you're offering me 300,000 euro. I just take 250 because I replace the other 50 with the First Home scheme. You cannot do that. We clearly work very much hand in hand with the banks. So they will give us a very clear outline of what your funding stack will be. So it's important to realize this cannot replace your mortgage. It's only if you have a gap, and I'll talk about that in a moment in the next slide, between your mortgage, your deposit, and the price of your home. So it's designed to supplement your mortgage, not replace it. And the final point in this slide is the maximum percentage that we can give you is 30% of the value of the property if you don't avail of Help to Buy. But if you avail of Help to Buy, it's 20%. So 20% subject to price ceilings, which again, I'll talk about in a moment, but potentially up to 20% with Help to Buy or 30% without. So we just move on to the next slide then. Just have a brief example here of how it might work. So in this scenario, we're talking about a property, €350,000. We're talking about a household income of 70,000. Now that could be a single person or it can be a couple, it doesn't matter. But in that scenario where they can get 4 times their income, we're talking about a maximum mortgage of 280,000. They must have 10%, you must have 10% as well in the form of a deposit. Now this is where the Help to Buy comes in very neatly, because potentially, depending on how long you've been working here and paying tax in this jurisdiction, you can get up to €30,000 in form of a rebate. So in this scenario here, you need 35,000 for your 10% deposit. So potentially you only need to save €5,000. You will have additional expenses such as legal fees, etc. But the point is, you don't need to be saving forever, contrary to some of the narratives again out there in the context of, look, I need to save 40 grand or 50 grand. You don't. You can actually purchase a home considerably less than that if you can avail of the Help to Buy scheme as well. But just jumping back to this example, so we have somebody now who's got 280,000 mortgage, got 35,000 in the form of a deposit, so that gives them 315,000. But as we said at the outset, the home is 350,000. So you can see straight off there's a shortfall of €35,000, and that's where the First Home Scheme can come in. We can come in and provide that individual or couple with €35,000 in the form of an equity share, and that allows them to go off and purchase that home. So it bridges the gap between your mortgage, your deposit, and the price of the new home, and that's how the scheme works in essence. So just moving on then in terms of some of the details around it. If we just move to the next slide there, Conor, thank you. So there are 3 products available through the scheme. Most people aren't aware of that. The first one relates to new builds. So if you're buying a property in a development anywhere in the Republic of Ireland in a scheme, for example, the schemes that the Sherry Fitz sell, any of these schemes, then you can use the First Home Scheme there, and that's the majority of our business. The second one then is a tenant home purchase scheme, and that relates to somebody who's in an apartment or a house that they're renting, and the landlord issues them with a notice of termination. Now, notice of termination must be because the landlord wants to sell the property. So if they issue you with that, and it must be issued to the RTB at the same time, then you can actually use the First Home Scheme to put an offer in and potentially purchase that unit. It's very important because we see this quite a bit. Even though every tenancy is supposed to be registered with the RTB, it's very important. You cannot use our scheme unless your property is registered with the RTB. So if you're a tenant in a property, you need to make sure your landlord is registered. And then the final one relates to self-build. And this again, not so much, I suppose, of interest, probably people on this call today, but if you have a site, if you're fortunate enough to have a site yourself or your farmland or whatever it might be, and you want to build a property, then we can provide you with funding to cover the build costs in the same way by bridging a gap between your mortgage deposit and the cost of the build. So there are 3 different products depending on what scenario you're in. So that pretty much covers most scenarios in relation to first-time buyers. So just moving on then to the next slide. So qualification criteria. So the minimum equity that we can provide is 2.5% of the property value or €10,000, whichever is the greater. So look, if you're short, 5, 6, 7,000 euro, this scheme is not for you because there are costs and there's administration. It's like getting a mortgage. You wouldn't get a mortgage for €10,000 if you wouldn't get this scheme either. So it needs to be minimum of 2.5% of our minimum of €10,000. There is an interactive calculator on our website, which is firsthomescheme.ie. So you can go into that, you can put in all your details in a matter of seconds, and I will tell you very quickly, potentially, how much you could qualify for from the scheme, subject to you meeting the criteria. So there are three items to determine the maximum amount you can get. So the first one is the price of the home, and this relates back to whether you're availing of the Help to Buy scheme, which is the case there, as I said, with the second point. So it's either 20% if you're availing of Help to Buy, 30% if you're not. And then the local area property, our local authority area in which the property is located. So I did touch very briefly initially, it said there were price ceilings in place. So I'm just going to touch on those briefly now. So price ceilings really are the maximum price that the property can be in the local authority area which you're proposing to buy. So for example, at the moment, and on the next slide there, I have them set out. So in Dublin and the 4 local authorities in Dublin, the maximum house price that you can use the scheme with is €500,000. It's the same for apartments, or indeed the other products there that I have on the right-hand side column relate to self-builds or tenant home purchase. So you can see there are different price ceilings for different parts of the country. And you might say, well, why are there any price ceilings at all? And it's a fair question. And the reason they're there are really to protect you, the consumer, because a similar scheme in the UK a number of years back didn't have price ceilings at the outset. And what was discovered was that it contributed quite considerably to house price inflation. So that's something that our shareholders are very conscious of, and in particular the state side, and they do not want our scheme or indeed any other scheme to be contributing to house price inflation. And again, you will hear people out there saying, oh, all these state schemes are adding to house price inflation. I think if you look behind the detail, and we have, and I'm not going to get into it here now, we have looked behind the detail, you'll find that actually it's not the schemes, there's lots of other things, but not necessarily the schemes that's contributing to house price inflation. So those are the ceilings there, they're available on our website, so you can see exactly how much, and if you use the interactive calculator, it'll ask you what local authority area you're proposing to purchase in, and it'll automatically apply that in any event. So then just moving on, we'll just look at how the equity share itself works. And the next slide there, please, Conor. And we have, again, just some examples of how this might work. So it's important to realize, and this is where, the next few slides really deal with why this is not a mortgage and the differences, considerable differences between this, our product, and a mortgage and what it might look like. So in terms of how we calculate how much you owe. So again, just to be clear, this is not a grant. You do have to repay this. It's not like the Help to Buy scheme, which you don't have to repay. It's a rebate of your taxes. You do have to repay the First Home scheme. But again, it's quite, I would say anyway, that it's a fair process. So I'll explain to you there now. So let's say on day one, you purchase a price. I appreciate these figures are unrealistic, but I've kept them at rounded for the purpose of demonstration. So let's say you purchase a property, it's cost you €200,000. Let's say you have 180,000 of that. We give you 20,000 or 10%. So we give you 20,000 on day one. Let's say 10, 15 years down the road, house prices have increased. Fantastic. And now that house that you paid 200,000 for on day one has now increased to €300,000. So it's gone up considerably by 50%. So the amount you owe the First Home scheme now isn't the 20K we gave you on day one. Bear in mind, we gave you 10%. It's the percentage we gave you on day one. So it's the percentage of the value of the property when you come to repay. So in this scenario, we gave you 10% on day one. The property is now worth 300,000. So it's 10% of 300. So the amount you owe us now is €30,000. But it's important to realize that it works both ways. And, let's hope not. But if property prices go down considerably, in this example here, just showing it, property prices have gone down by 50% as opposed to going up. Well, then the amount you owe us also goes down because it reflects the market value. So in that scenario, you originally took out 20K, now you owe us 10K. Now, some people do say, "Oh, that's a bit unfair because you get any uplift in the market value of the property." And we say, "Yes, that's the way it works." But I think that's quite fair because on day one in this scenario, you put in 90% into the value or into the purchase of the home, so you will get an uplift on 90% of it. We get the uplift on the 10% or the downturn. So but if we put in 10, if we put in 20, our uplift or our loss is on that percentage, nothing more, nothing less. And you can pay this off at any time, as I reflect now in the next slide where we look at some of the other details around it. So there's no interest charge for the first 5 years. So again, very dissimilar to a mortgage. So for the first 5 years, you can pay back the facility and it will be paid back based on the value of the property. So again, it's back to the equation of the equity percentage by the price. So that's all you will pay us. There's no service charge. After 5 years, there is what's called a service charge, or indeed it's interest. It's a percentage, but we strictly don't call it interest because it's not debt. But the rates are set out there. So from year 1 to year 5, it's zero, nothing. Year 6 to 15, then onwards, it's 1.75%. After 16 years, it becomes 2.15. And the reason for that is to try and encourage people to repay. But the important thing to realize here is that, firstly, there is no fixed repayment date, very different to a mortgage. There are no monthly repayments, very different to a mortgage. So when you pay, it's entirely up to yourself. Also, the service charge, when it becomes due at year 6, it's entirely up to you whether you want to pay it then or not. It might be a challenging time in your lives. You might have kids, going to school, going to college, whatever it might be. Somebody might have lost a job, whatever the scenario is. And the last thing you want to be doing is having to start paying interest in year 6. And if you don't want to do that, then you can roll it up. And the key point here is you can roll it up on a simple interest basis. So you're not paying any additional cost for the privilege of being able to roll it up. And you can pay that then at any time in the future, whenever it suits you, or whenever you get a few quid, or whatever it may be. There are 4 scenarios within which you must repay the full equity and any outstanding service charge. And these are a sale of the property at any point in time. So again, that is similar to a mortgage. If you're selling your property, you clearly have to pay back the bank the mortgage. You also need to pay us back at the point in time. The property is no longer your principal private residence. So again, if you're fortunate enough to be able to buy a second home and then move into that, and maybe you want to rent this one out or whatever, you're perfectly entitled to do that, but you must repay the first home scheme. It's not for investment properties. It's not for rental properties. The third scenario is customer remortgages with a lender who's not a member of the scheme. And this is, if you recall at the outset, I was saying it's important to remember who the banks are. So it's AIB, Bank of Ireland, PTSB, EBS, and Haven as part of the AIB group. So if you're with any of those banks, you can change within those banks. So say you could be with AIB and you could go to Bank of Ireland or PTSB and vice versa. And there's no, you can still retain the scheme and continue on because all of those banks are in the scheme, and that's an arrangement we have with them. However, if you were to refinance with a lender who's not in the scheme, well, then you have to repay. And again, this is in the interest of, I suppose, fairness, because those lenders that I listed out, those 5, they're putting a lot of money into this scheme. And when you get a facility from us, 50% of the money you're getting comes from the lender and 50% from the state. So if you go to a lender who's not in the scheme and hasn't paid for it, it's fair that you pay it back at that point. And then the final scenario is the death of the owner or owners and the property is subject to probate. So again, once the last surviving member of a couple, say, passes away, and the property is let to or is inherited by family members or whomever, then any outstanding facility or indeed service charges on the property at that point in time must be repaid then. But this, I suppose, highlights the fact that you could live your entire life in the property and in fact pay nothing, because you can roll up your service charge and you don't have to repay. There's no fixed repayment dates on the equity. Now, our desire and our hope is that people will repay it after a couple of years. But I suppose in a scenario where financially you're not in a position, for whatever reason it may be, through ill health or whatever, there is no pressure from us on you to make your repayments at any point in time. Okay, we just move on then to the just some further details. As I said there, the scheme can be, or the equity can be partially or fully redeemed at any point in time, and that's entirely up to a customer when they do that. You must get a valuation because obviously, as I mentioned previously, the amount you owe is calculated. We have an independent panel who actually value the properties. So it's very simple. You go online, you have a web address, you click on it and you order a valuation there. We have no say over, we've set up the panel. It's operated by GeoWalks for us at the moment, but it's entirely independent of us. We've no say in who actually does the valuation for you. They will appoint somebody, they'll come out, they'll do your valuation. There is an appeals process. So if you don't like, if you disagree with the valuation, or indeed if we disagree with the valuation, and we have, and so have other customers, there's a process there that you can go through. It's very open, transparent, and fully auditable, and it works quite well, if I say so myself. Quite a few people have already repaid. Some of them have been challenged, some of them have gone for second valuation, but it works and it's good. It's a good system. We do provide annual statements. There's always a helpline or email and query line if you have an account with us that you can contact somebody at any point in time with queries. The deployment phase of the scheme was expected to last 3 to 4 years. So in theory, we would be winding up this time next year. Thankfully, that's not the case. The scheme has been extended and we're currently funded to June 27. And indeed, we would hope and expect that we'll be funded beyond that in due course. As I mentioned at the outset, security for the equity that we provide is in the form of an inhibition. That's equivalent of a second charge. That's all done between your solicitor and our solicitors, so you don't need to worry about that. It's all done in the background, and it's you have to go to your solicitor. The solicitor will go through the contract with you the same way as they'll go through your mortgage contract. You will have to sign a couple of declarations confirming that you're first-time buyer or whatever it might be. But all of this is done by your solicitor, explained by your solicitor. So and it runs in tandem with your mortgage. And you know, if I say so myself, I think the process is quite slick. I mean, from the time you apply for our facility for the and if you the scheme, and if you have all of your documents ready to go, you potentially could have the funds drawn down in 3 weeks. That has been done and it has happened. So it's very much a back and forth between the documents that we provide you with the bank. You'll have to upload a couple of documents. 99% of the process is online. It's only the very last document, the contract, is issued out to you and your solicitor. That comes in the form of hard copy, but everything else is done online. Okay, if we just move on there, then we have some interesting facts. I know Colm has already touched on one or two at the outset. So to date, we've had almost 20,000 now. This is registrations. I suppose the important stats there are in terms of approvals. We have over nearly 8,500 now, or 362 million committed, reserved. We have issued over 4,100. Actually, that's much higher even now, because at the moment there's about 5 to 6 million going out every week in funding at the moment. So there's quite a number of homes being closed. So we've 4,100 plus homes financed or part financed at this stage. So look, the scheme, as I say, is growing in demand, and particularly in the geographic areas there, in the blue one at the bottom, you know, Kildare, Dublin, Cork, as Mags referred to earlier on, Louth, Wicklow. So those are all commuter belt counties. We're doing huge business with those at the moment, and it's good to see that the scheme is becoming very much part and parcel of the purchase process. So if you just move on then to the last slide there. I don't know if you want to deal with questions now, Colm, or if you want to leave them till the end. But sorry, that's the QR code that'll take you straight onto our website. It's firsthomeskeme.ie. And as I say, I don't know if you want to deal with queries now, Colm, or
Yeah, Michael, look, I think a lot of the questions we've had coming through have been around how do I pay the equity back, and also around the caps and when they get decided. So I think you've covered off them pretty well. One or two other ones then, just really quickly. The service charge, question is that on the overall value of the house or the equity share? So I think again you've covered that, but just to clarify, it is on the equity share as opposed to the overall value of the house.
Exactly, it's on the amount you draw down on day one. So that doesn't grow with the value of your property. And just on the price ceilings, they're reviewed twice annually. I'm sorry, I didn't say that. They're reviewed twice annually, and in fact, we're going through a review at the moment, which will be announced first week in January. So the new ceilings are announced first week in July and first week in January. If there's a need to change them, and we do keep a very close eye on them. So the next review will be the results of that, and the outcome of that will be announced first week in January.
And then just one final one then, in terms of the uplift that someone has to pay on the basis of uplift in value, it's after a number of years, who decides the value on the property?
Again, it's the independent panel of valuers that are appointed. So a valuer, unbeknownst to us, we will not be aware of who it is. We'll go out, inspect the property, and put a valuation on that. The customer will get a copy of that valuation, as do we, and both customer has to agree to it, and we have to agree to it. If either party disagrees, there's a second valuation, and then there's even a third. There's an appeals process after that as well. So it is, you know, it's working. It's all pretty fair. It's very open. It's very transparent. So there's no ambiguity about how the price is arrived at.
Brilliant. Thanks, Michael. That was great. We're just against the clock at the moment, so we're going to move on to Marguerite. Marguerite's going to take you through the Help to Buy scheme and also some other changes in the budget, along with what we have coming up in the rest of the year and Q1 2026. So over to you, Marguerite.
Great. Thanks, Colin. So as Michael mentioned, and he touched on it, is the Help to Buy scheme. So I'll just talk you through kind of a high level overview of what it is. So it's essentially a government scheme which is designed to assist purchasers with their deposit. It was recently extended till the end of 2029. So if you are just starting out looking, not to worry, it's there for a few more years, so you can avail of it. In order to qualify, you do need to be a first-time buyer, and we do get a lot of questions about, oh, my partner's not a first-time buyer, can I avail of it? You both need to be first-time buyers. Both owners do need to be first-time buyers, and also you can't have owned a property abroad. It has to be your first home. It also qualifies to self-builds, but the cap is 500,000. So the property has to be priced at 500,000 or less. And you also must be taking a mortgage, and it must be at least 70% of the purchase price. So in terms of the amount you can claim, it's a maximum of €30,000. And you do, in order to avail of it, you do need to be working in Ireland for the last 4 years to qualify for the full 30,000. So if you move on there, just on the qualification process. So if you want to apply, you have to do so through revenue.ie. It's quite a straightforward process. So the first stage is to go online, get your application number. So then when you're looking for a property, if you find one, you give that number to the sales agent. And then it can move to the claim stage, and that's along with your loan offer from your bank. And then you will exchange contracts and you'll get a new claim number. And then it moves to verification stage. So it's a pretty easy process. We don't get much complaints about it. It's very helpful for getting people on the property ladder. And we do see the majority of our first-time buyers use it under the 500,000 level. So moving on to schemes where you can avail of both the first home and the Help to Buy. As Colin mentioned earlier, the scheme in Drogheda, it's called Usher's Mill. Very popular scheme. We just had a launch there recently, and it is now nearly sold out. So in the new year, we'll be launching more homes here. But if we take, for example, a 3-bedroom semi in Usher's Mill at 425,000, which was the pricing, typical pricing here, your mortgage repayments are looking at like about €1,200 per month. So you can see with the first home scheme layered on it, that only requires a household salary, a joint combined gross household salary of just under 75,000, and that's before tax. So moving on then to Coach Road Meadows, this is a new scheme we're launching in Clane. So we have apartments there from 360,000. So they can avail of both the Help to Buy and First Home scheme. Your monthly repayments, if you're using both, is just over €1,000 per month, and a household salary required of 63,000. Then back to Dublin, Aderrig and Adamstown, we've apartments there available currently at 450,000. Again, Help to Buy and First Home scheme applicable, with monthly repayments of just over 1,300. Then Regals and Lusk, a scheme that we are launching soon. Again, the pricing is to be confirmed, but there will be options for a First Home scheme and Help to Buy. Moving on then to outside the GDA, we have Lakeview in Cork in Middleton. So we are selling houses there at the moment, 3-bedroom end of terrace from 430,000. Again, Help to Buy and First Home approved. And your monthly repayments there are just over €1,300, and a household salary required of 75,000. Then to Galway, we have a scheme there, Garan Culdarach in Oranmore. This one is over the First Home scheme threshold, but you can avail of Help to Buy. And we do have 3-bed mid-terrace available there, just under 490,000. Then to Galway City in Knocknacarra, Knock-on-Creva, on the Clybone Road, we have apartments there available, 1- and 2-bedroom apartments starting at 340,000. So again, Help to Buy and First Home approved. So moving on then in terms of schemes we have coming next year, later this year even, Haley's Hill in Kinseely. So we've been selling houses there up until now, but we will have apartments and duplexes coming, where you can avail of Help to Buy and in some cases First Home scheme. Avonlea in Adamstown, again, we will have apartments and duplexes coming hopefully in the new year there. So they will be Help to Buy approved. the 2 beds, and then Ardna Park Yash is in Kildare town. We've been selling houses up until now, but we will have apartments and duplexes coming either the end of this year or early in the new year. And then finally, South Coast in Woodbrook is in Shankill, new Dart station in there, so great location. And we will have apartments for sale. We will have a purpose-built show unit, which will be available hopefully later in this year to view. So moving on then to recent developments in the budget. So you may have seen it was quite widely reported about the reduction on VAT on new build apartments, which we welcome as a measure to increase the supply of apartments to the market. So we hope to see more privately for sale apartments resulting from that. There was also a lot of money put aside for the starter home scheme through Help to Buy, Croí Cónaithe. So there's all sorts of measures out there that will hopefully improve supply of houses, which is much needed. And in the next couple of weeks, there'll also be a revised Housing for All, which is the government's programme for housing, which we expect to see in the next couple of weeks. So there'll be a lot more detail on measures for homeowners in that. So keep an eye out. So this is just a recap of the links we discussed. So if you want to take a screenshot of it, or scan the QR codes, please feel free to do so.
Thanks, Marguerite. I'm conscious of time. We're just past quarter to 2, but just one really quick question on your presentation there coming through, I suppose, from first time buyer is, what are the most common mistakes people make when looking to buy a new home, and how can they be avoided?
Yeah, I suppose preparation is key. I think when you are seriously considering a new home, do your homework, especially if you're going to a launch and you're hoping to reserve a house on the day, have your mortgage approval with you, know how much you can borrow, look at the site plan, visit the area in advance. A lot of the areas that we sell in, people are maybe coming to the area for the first time. So it's just really to do your homework, make sure you're prepared, just so you're not disappointed on the day, that you have the best chance really of getting the home you want. So preparation is key, I would say.
Perfect, that's great. Just one more quick one for you, Ronan. It was back from earlier in the presentation. Someone who has applied for AIP a number of months back and has been promoted and their salary has increased, should they reapply?
Yeah, absolutely. Your mortgage approval is organic. It's valid for 6 months. As your circumstances change, so too can your approval in principle. We see it all the time. Go back to your broker, go back to the bank. If you do wish to borrow more, you should be in a place that you're able to do so based on your higher income bracket. You don't have to start the process again. Typically, 1 or 2 bits of documentation can see you with a higher approval if you need it.
Great, thank you. Okay, we're just 2 minutes over time, so we were pretty good there. I just want to thank Michael, Ronan, and Marguerite for their time today and their presentations. A reminder once again that the recording of today will be emailed to everybody who has registered, and also it will be available on our website. And then after that, all that's left to do is to thank everybody for attending, and keep an eye on our social media channels. Our next web event will be in January 2026, so it'll be next year, but we'll be keeping an eye on all the various changes that are happening in the market, and we'll update you then. So thank you very much for attending, and enjoy the rest of your day.
Thank you.
Thank you.